Good evening, traders, and welcome to the Traders Corner daily market update for the 13th of December 2010. Well, today's been a risk-on day for the currency markets, with the euro, amongst others, rallying very strongly against the US dollar. This is driven largely by the fact that China kept interest rates unchanged. A lot of the market had been expecting the Chinese to step in and raise interest rates because obviously at the moment they've got soaring inflation. However, they didn't do that today, and that was a signal for anybody that wanted to invest in the riskier assets to jump in and buy. On top of this, the US Treasury yields fell, which decreases the demand for the US dollar or for assets denominated in the US dollar, which again added further weight to the downside for the US dollar today. And then we have our conundrum. I mean, the Chinese kept the interest rates unchanged, as we said, but then they also had inflation come out at more than expected, which sort of means that even though they didn't raise interest rates today, the outlook for the future is that they will have to step in and do this, which should dampen risk appetite a little bit. So what does this mean? In our eyes, it means obviously today the currency markets did rally, but we don't see that it's very sustainable going into next year, into Q1 of next year, because China are the driver for global growth at the moment, and if they start to raise interest rates and rein in the growth in their particular economies, then that's going to affect the rest of the world. So even though we had the risk on day today, we do anticipate that sometime in the near future, going towards the next rate meeting, again, the markets will be anticipating China to step in and raise interest rates, which will dampen risk appetites. And, obviously we believe that the riskier currencies will suffer as a result of this. However, they didn't do that today. Today was fun in the sun for all of those risk currencies. So let's jump into the charts and see what that's meant for our positions and see if there's anything else to set up because of it. Okay, so let's start by taking a look at the dollar-yen chart. Now, as we've mentioned in the past, we really do like this pair, and we like the potential to the upside, not only from a technical perspective, but also from a fundamental perspective. And what we can see over the past few weeks is the dollar-yen's come up to this particular level here, the 84.40 level, and has bounced away and has come up again and bounced away, and it's really finding it difficult to get past this level. Now, to us, that's actually a really good sign, because what that means is that once it actually does break through this level, then we should see some really strong momentum to the upside as stop orders start to get filled and other traders decide to jump in this particular trend. So even though the markets is finding it difficult to get through this level at this particular second in time, this isn't going to scare us away from this particular trade. It actually just makes us like it all the more. So if we do get a break of this particular level, we're going to be all over it, buying the dollar-yen and anticipating a move all the way up to around sort of like the 90s type area before we see some major types of resistance. So that's it for the dollar-yen. Looking for a break of this level, and if we get a break, we'll be buying to the upside. Moving on to the euro dollar. Now, as we said, we're actually short the euro dollar at the moment, which is not the best position to be in. What we have here, though, which is a little bit encouraging, is the fact that the market has come to this particular level, the 13439 level, and has bounced away, which is done on this previous occasion here, and this level also acted as a support zone here, where we had the complete breakdown of the previous uptrend. If we just zoom out a second here, you can see that the uptrend over here was completely nullified at this particular level when we got a break to the downside. So we're going to be looking to we're looking to stay in this particular trade unless we get a break of this level. Our stops are currently at 13450. So if we get a break above that, we're going to stop, reverse our position, because obviously here we see that the market's gone up, made a high, and it will have failed to make a lower low than the previous low, indicating that we have a reversal in the trend. Then we'll be buying the euro, looking for a move up to the previous highs of the 43 level. However, it's early days yet. The market has moved away from this particular level, so with a bit of luck the euro dollar will continue on its downwards path, and obviously fundamentally we believe that's where it should go as well. So this one will be an interesting one to watch out for, as it looks like there will definitely be some movement tomorrow one way or the other. Moving on to the pound yen. This is another trade that we like, similar to the dollar yen, in the sense that we're looking for a break of this particular level, which is the 13419 level, for a move to the upside. And this, I mean, the pound yen, when this gets going, this has got massive potential. If you take a look at where it came from, if we go into a monthly chart over here, it's lofty highs of, the pre-crisis types of highs. The markets was all the way up at the 214 type level, and then going back even further to 2007, we were up at 241, 250. Right now we're down at 132, so we've got a long way to go should the pound start to recover against the yen. So we love this trade to the upside. We think there's massive potential. If we can get onto this trade and ride it all the way up, these are the trades that you really look for, the trends that you look to really ride. So that's looking good as well. The dollar franc was one that we liked to the long side. Unfortunately, it's really not playing out that way. In fact, we got a break to the downside today, which we looked to take, but for one reason or another we weren't in front of the screen at the right time, missed this particular entry here. So if we do get a break tomorrow of the low of this candle, confirming further move to the downside, then we'll probably be in there on the short side as well. Finally, the euro pound, and this is an interesting one. Thank goodness for levels is all I can say, because we were waiting. We wanted to short this particular pair, but we wanted to wait to see a break of this particular level here before we decided that we had enough confirmation to start shorting the euro pound. It came within literally whiskers, within an inch of this particular level, and rebounded all the way up. So at the moment, we're still not in this particular trade. If the market does come down, we will be looking to get into it, but it's rebounded for the moment, so we're just going to sit to watch to see what presents itself and take things from there. So that's it for today with regards to the trades that we're looking at, and the things that interest us. Obviously, as always, this is for educational purposes only. We're not trying to sell you guys signals or tell you how to trade. That's not what we're doing here. We just want to show you what we're doing, with the view to hopefully helping you guys find profitable trades as well. So thank you very much. Thank you for listening, and have a good evening. Take care.